Hi, just a quick update here looking at the indexes and the liquidity in them. I've got two sets of the same indicators. The bottom three are looking at the liquidity within the Mag 7. You can, within all our indicators, you can have a look and pull down the set that you would like, which are most relative, so you can have a comparison about what's happening and see where the buying's done. When we had a look yesterday, we could see that the buying was definitely index buying, and we didn't see any buying in yesterday that really related to the mag. We can see the mag's really been quite flat the last few days, even though we've had quite a good bump up. So today the indexes did see some buying. This is probably market makers and dealers having to buy back futures that were sold to cover for the puts that are bought each month, and we're moving into a period where, as we get closer to the end of those option contracts, that the theta, the time component, is having to be bought back, and that gives us this bid under the market, as all of the option positioning is quite long in the indexes at the moment, so it's a long market. We can't see any, or I can't see any possibility of much movement at the moment. It's quite a tight market. It doesn't look like if we went down, it would be all dip sport for me in my portfolio. Let's just have a look at the SPY. The SPY has seen a lot more buying. When we were having a look yesterday, we could see that we've had these very strong periods for retail to be buying, as opposed to we've had quite flat here and nothing much happening in the mags. If I have a quick look at the NDX, the NDX has started to see a little bit more buying. Quite similar in shape, to the mag, but I think it's much more the smaller components of the NDX. And if we went through to the Qs, we're going to see something pretty similar to we saw in the SPY. That here we can see this buying that has been going on is much more. We can see this section here, and we can see the dip was really well bought around when Gamma pulled back at OPEX. At the end of May, and as soon as we had a dip, there was no fear from any of the day traders, and so or the swing traders. They have got in and they have bought that dip really strongly. And again, we've seen them as we've had this little pullback into Friday going into Monday. Again, they've bought it. Very strong at the moment. The only other thing to notice today was a little bit of a flat day. The reason for that would have been rebalancing within the parity. Just go out to 2 hours. Parity portfolios and the 401ks and all of those sorts of things, the people's retirement funds. So what we can see during this period here is we've had a really strong bottom. Just don't look at these. We'll just close these ones down. Just look at the top ones being the TLT here as my proxy. If we look at the IEF, it's got the same. It's this very strong buying through the bottom there. So we've had a really strong buying moment. We did have one the other day that collapsed at the start of April, and that was something to do with the bottom being bought, and so people really saw the money being made was much more in stocks and the indexes rather than in the bonds. Now we've got to a high gamma situation. They're buying the bonds again. That could be related to the data that's coming out, or probably is related to the data coming out, that we're starting to see the economy really weaken in the back. Jobs are still quite good, but going forward, all the figures are looking pretty terrible. Anyway, I hope you have a great day's trading. I hope that was some help. It's a long market, all dips being bought, and we've got the theta effect coming in for the second half of the month, or what is called the charmer effect because of the theta buyback. Thank you very much. Have a great end to the week.